watching a home broadcast of Business World Live. I'm Danny Laurel. It's just a little past 10:30 a.m. this Tuesday morning, a bit over 1 hour into trading day. Let's kick off with our top story. Now, the government has been throwing everything but the kitchen sink to minimize the economic impact of this COVID-19 pandemic, and that also includes taking on debt from wherever they can. But does this mean that the government has also thrown prudence out of the window? Well, probably not, but the government has assured that because we have been trimming our debt in the past years, we actually have the room to get back again or back at the debt again to manageable levels. But the next question now being, how do we pay for all of this debt? Well, Finance Chief Sonny Dominguez has hinted that maybe sometime in a year or two, the government may need to raise taxes once again. But no one in the Senate wants to touch such an unpopular pitch. Now, lawmakers were warm to that idea, with Senate President Tito Soto saying that such a proposal should probably be tackled by the next administration. And Senate Pro Tempore Ralph Recto also says it's crazy to talk about these things right now. Now, over at the lower house, Ways and Means Committee Chair Joey Salceda noted that there are taxes that could be increased that will not impact low-income households, but he did agree this is something for the next administration to be taking up. Now, so far, the government is negotiating around $5.7 billion in loans. That's from different multilateral lenders, including the World Bank, the ADB, and the Asian Infrastructure Investment Bank. And even if we do take on all of that debt, Salceda says it will not affect the long-term fiscal position of the country. Okay, so we need to kick off the markets with the most surreal thing ever. WTI crude oil sliding to negative territory. Really, it was the negative for the first time ever in history. You can see that on my screen here in my Bloomberg terminal, how that just dipped yesterday. This, started like just another gloomy day in the markets, especially for oil. Recall that yesterday morning during the broadcast, we had seen it already sliding down to $15 a barrel. Look at it trading right now to $1.57 to a barrel. So I can basically buy a barrel for $1, just a little over $1.50 right now. So by the end of the trading day yesterday, it had contracted to as low as negative $37.63. So what does this mean? This basically means that traders were willing to pay close to $40 a barrel for people to just take out the oil from their shelves, basically. So what does a negative oil price even mean in these types of scenarios? Well, traders were saying that the U.S. storage was already full, and there was so much crude flowing in the past 3 weeks in an area called Cushing, which is, of course, in Texas. And that was a breakneck speed. There were 740,000 barrels a day. And they were taking in more oil than a size of a European nation like Belgium actually consumes. So at that rate, there were too many tanks that were full of oil. And also by the end of May, they could not anymore take in all of this inventory. So this trader said was actually just a glitch in terms of trading, because these were contracts that were expiring on May. And as we know, most of the world is now, in a lockdown or in some sort of quarantine. So there's not a lot of business going on. And a lot of the orders were not taken out of the inventory pile. But actually elsewhere, the markets did proceed, as they say, normally. So you could actually see the contracts for June. So more optimistic going forward after May. You actually saw some trading at $25 a barrel, for example, and the June delivery for the WTI was around $21 a barrel. So not necessarily as dramatic, but just to highlight the fact that oil slid to close to negative $40 per barrel in yesterday's trading, with not a single bid happening, which traders had called very ridiculous. Now, moving on to how this oil slump, let's say slump is like a very soft word to call that, and how the Asian markets have been performing on the back of that. You can see that the three big indices in the US traded negatively overnight. Let's move on to Asia Pacific and how that is moving a lot of investors still on edge, reacting and waking up to this news basically overnight. You can see Japan's Nikkei 225 down by 1.3% this morning, together with Shanghai and Shenzhen Composites over in China. The Hang Seng down by 1.9%. So really not a lot of indices that are open and trading right now in the green, really. And also just the futures in the US that are right now trading in Asia are also slumping. So it seems like Wall Street might be following again another day of losses. Now, another thing to be watching out for here is how the peso had reacted. Recall that the peso was also trading overnight, and this amid all of these oil slumps, you could actually see the peso weakening a touch. It's now hovering closer to 51 levels after having been stronger earlier on. It's at 50 spot 874 to the greenback. But DOF economist, from the Department of Finance, Hill Beltran, is saying that regardless of all of these issues that we've been seeing together with the COVID-19 pandemic, the peso, he says, has remained stable. So what are they saying? They did mention that there's still some strong foreign exchange inflows, especially from exports and remittances and investments abroad, that are contributing to a strong balance of payments position here in the country. Now, recall, we had reported earlier on that the country had seen a balance of payments surplus. So basically, we're getting more money in than we are spending. And that was around $7.84 billion in 2019, which was the highest surplus we'd seen since 2012. But again, these are figures of 2019, and we have yet to see what's going to be happening this year. But nevertheless, they did mention that compared to the other currencies in the rest of the region, we actually have been one of the most stable. Now let's move on to how our local index is opening this trading day. I had taken a look already just a few minutes ago, and we are nevertheless still in red territory there. We are below 5,700, 5,624 is the level. That is actually down by 1.9%. We had actually opened even worse than that. We had seen a low of 2.2% down. So we're actually paring back those losses. And recall, this follows a day that we had already seen heavy losses, close to 1% yesterday. Another thing that was very worrying yesterday is just the fact that the trading was very thin, very low volumes. And this from Phil Stocks' Piper Tan, the lack of foreign money, and I'm going to pull that chart out for you. The fact that we're still seeing a continuing exodus of foreign funds just exiting, and this for the 24th straight day. So you can see that just that sea of red there. He says that this simple indicator shows how our rally, the past 4 weeks at least, is not something that is sustainable. And he did mention the 5,800 levels is a very strong resistance to be breaking. Now let's take a look at our sectors here and whether there are some bright spots despite the early sell-off we're seeing. None whatsoever, I have to report, together with mining and oil, which is down by 2.8%. Everyone from financials to property firms, industrials, and holding firms are severely in the red. Just want to point out financials for you, down by 1.3%. This amid the Banco Central saying that the February bank net loans actually rose double digits by 12.2% year on year. But we will be moving on to markets again later on in the broadcast. Meanwhile, let's check in on other headlines we're watching this Tuesday morning. Job hunters, take note, the online search website jobstreet.com has released its list of work that has been hit by the pandemic. So what is this? This includes jobs in merchandising, retail, and mechanical engineering, which all saw massive declines in job postings. Meanwhile, demand for digital and healthcare jobs remains strong. Other jobs that can be done remotely, such as English language tutors and IT and software professionals, also continue to have high openings. Now, amid the virus outbreak, JobStreet saw a rise in demand for health workers with no work experience. This comes as the country struggles with a dwindling healthcare workforce amid the continuous rise in the number of confirmed COVID-19 infections. Now, more cash aid is coming from the side of the government for displaced workers. The Budget Department released 2.5 billion pesos. That's to replenish the Labor Department's cash relief program for workers affected by this pandemic. Now, this is the latest replenishment, though, for the DOLE. That's according to the DBM. The Budget Department added that the 5 billion peso remaining funding request, which could support 1 million people out of work, is not likely to be approved. The final batch of funding for workers' aid will be used to support some 300,000 workers under DOLE's camp, as well as another aid program called Tupad. The camp provides a 5,000 peso cash aid for displaced workers, while Tupad seeks to provide temporary emergency employment for workers, and both programs had some 1.5 billion pesos in initial funding. The Transportation Department said it can free up to 15 billion pesos in funds for government efforts against COVID-19. Now, for this, 35 transport projects will be up for budget realignment. The DOTR, though, declined to provide which list of projects because it's still a proposal, but Assistant Secretary Goddess Hope Libiran said the list involves programs across all transport sectors like rail, airports, ports, and roads. Libiran also clarified that the projects are not being axed and will still proceed as only a portion of their budget will be realigned. Now, so far, the government has allocated 1.45 trillion pesos for the COVID-19 response. Under the Bayanihan Act, the President has the authority to realign items from the 2019 and 2020 national budgets so that it can fund measures to contain COVID-19. So we are now 5 weeks and counting into this enhanced community quarantine here in Luzon. The big question is, has this all been worth it? To help us answer the tough questions, we have with us Chief Economist of Union Bank, Carlo Asuncion. Carlo, finally, you're here with us to answer all the questions we have in mind. Now, just speaking of, neither of us are healthy here, and we all want the best, in terms of health, but we are looking very closely when it comes to the economy. Has the government been responsive? Has it used these 5 weeks in the best way possible in crafting a solution? And how are we faring compared to other countries in this response?
Well, if you're just going to look at the way we respond in terms of how much part of GDP have we spent or actually would want to spend, we're, I think, the third or the fourth one so far. Of course, you have Malaysia, you have I think Thailand, and then you have Singapore, and then I think you have the Philippines in terms of a percentage of GDP of how much we are going to spend to cushion the impact of this COVID-19 pandemic. But so far, what I've been noticing, the government has been doing its utmost best. Even if there are difficulties in institutional difficulties like particularly rolling out the amelioration program, it's really a difficult situation. Everybody is just grappling for grappling for something stable to hold on to, and I think in fairness to government, they've been doing their best at this point, and I know that there's still a lot to be done, and I think even the private sector has pitched in, and I think really government still has to step up further to the plate and do what needs to be done.
Carlo, before we go to your own house projections on how this is going to go, just a quick take from your part on the resignation of former NEDA Secretary Ernie Pernia and how that colors the government's response. He was very vocal about the fact that we needed to have a gradual lifting now of the lockdown. Otherwise, the economy would really suffer. Do you agree that with him, or are you in the other camp that says that we still have some fiscal, monetary, response still there, still available for us to cushion the blow in case we do opt for a longer or prolonged lockdown?
Yeah, well, his resignation was really a surprise. Although watching him in the last 4 years, every time Malacanang or somebody else, some department or says something or puts a position, sometimes on the other side. So
Mm.
I looked at that. It's surprising, but at the same time, it's you see it coming. You know, when push comes to shove, when things like this happen, you know, the
Mm.
cracks supposedly in a team comes out. So in terms of the position of whether or not we should be opening, uh, I think it's really a careful balance that needs to be there. The science speaks for itself. Science is saying that you know, we're not there yet, or we need to be able to have a lot of testing, accredited testing centers around, and make sure that mass testing is going to happen. Contact tracing should be very efficient. You know, those things that we don't have. At least we're moving into that, but we're, we have to be able to listen to what science is saying, and make
Which is
sure that
we're
you know
not
you
there yet.
have a careful balance of the economic, you know, potential losses versus what science is saying. It's really difficult. It's really difficult, you know, and I really admire the people that make these decisions amidst all of this confusion, amidst all of these things that are unprecedented. I mean, your character as a person, as a leader comes out, whether it's going to be you're going to be a bad leader or you're going to be an inspiring one and a good one at that.
Carlo, let's now talk about your scenarios because I have to say, even reading your report, even your most optimistic scenario, I don't know if it warrants the word optimistic here. Tell us how bad is it gonna get even in the days?
Yeah, well, for the optimistic scenario, basically based it on the UP COVID-19 pandemic response team. I think that was the first one. I think, or the second one that they came out with, looking at a modified one, a modified community quarantine coming out of an April 30 ECQ. And you know, there in that particular chart, you have a expected uptick on the number of infected cases, but eventually it will, you know, come down to about, yeah, after probably August. August is the date of that particular chart saying the infections will go down. So, but of course, looking at this OECD study of an equivalent decline in GDP of a total lockdown in 1 month. They say that that's
Mm.
about 2% less of your GDP. So if you're forecasting 6.6, supposedly like us, 6.6 supposedly pre-COVID, even pre-Paal, so now you have a 4.6 for the year. But if we actually looked at the potential MCQ impact, we estimated it about you know, half of that, probably about 1 percentage point. So if you're looking at that, that's around additional 4%. So that's almost zero growth already for this optimistic
The best.
scenario. So
Carlo,
you
does
see
this
there
mean
in that graphic there the assumptions that we made. Actually, in terms of employment, the employment there is just about 6%. You know, and but for the worst case scenario that we work with that one with our risk team. That's what we're trying to do now. Just really working a multidisciplinary way, so that we could you know be more in a sense accurate. Although it's really difficult because it's very fluid and uncertain, but we're trying to get all our resources and making sure that you know, we have everything covered.
Carlo, does this already consider the fact that the monetary and fiscal stimulus will be, shut or triggered. So you're already expecting even more benchmark rate cuts, the triple R to be released pa even further, 300 bits maybe. So does that already in this optimistic case consider that the government will just go on full speed?
Yeah, well, in those cases, basically there's government where there are government spending assumptions already. So, but still, of course, as I said, it's very fluid and uncertain. But it may actually, well, at this point, for example, they're coming out with a loan program for SMEs. I think Governor Joknas mentioned that already this week. And I think that's something really very, in a sense, innovative. And I think that's where we should all be working together, at least for the banking sector, and making sure that we help the biggest employers. SMEs are the biggest employers of this economy. So um, yeah, I think with in terms of monetary policy and fiscal policy, in terms of those models, well, we're still going to be adjusting them eventually, but we're seeing it as this actually unfolds before us.
Carlo, is it are you do you believe it's realistic for the government to continue with the same infrastructure ambitious plans that it had? And also, is it still going to be feasible for us to be repaying the interest payments and the loans that we have at this time? According to Secretary of DOF Sonny Dominguez, we are not going to ask for a loan moratorium. Is that even possible right now?
Yeah, well, if you're asking about the build, yeah, I think we have to. I mean, from a practical standpoint, you have to really evaluate it moving forward. And yeah, I mean, like what they say is whatever it takes. So, but of course, it's a careful balance, not sacrificing, because eventually you're spending on infrastructure, not necessarily just the ones that we already have on not just the transport related ones, but also I think they're even looking at health related ones, investments in the government. So, well, with regard to loan moratorium, yeah, well, I think for the interest payments, I may mention about the time of Cory Aquino when she was also being egged on because it was the difficult time. It was after the Marcos regime. The government doesn't have any money. As in, it was a difficult time. So, but she decided not to. So, well, it was a difficult decision to do. But I mean, looking at it now, so far we've had a GDP debt to GDP ratio of according to the DOF 41%. So I mean, it has declined in the past years. So I think those small decisions are very important along the way. And a careful weighing because you're just technically, if you're not careful, you're technically, what as they say, just kicking the can down the road, and the future generations will be at risk. They're the ones who's going to pay. Our children.
Carlo,
Yeah.
our headline was that they're mulling over additional taxes and that might even roll over to the next administration. Is
hmm
that a concern? And also, just last question before I let you go. You mentioned even in your optimistic scenario, it doesn't seem like we're going to be bouncing back anytime soon in 2021 or 2022. It's not going to be above 5% growth if I'm not mistaken in your projection. So what's it going to take? I mean, you're saying that even in the best case scenario, even with all of this fiscal monetary stimulus and the right decisions and no loan moratoriums, we're still not going to be getting back to the on our feet at least for the next couple of years.
One assumption that I put there really is if you have an effective treatment like a plasma treatment like what we're having now. Once that becomes more, widespread, and it becomes successful, and an antiviral drug would be available, and tested and effective, and or an effective vaccine. I think that's the only time that we will be able to come out of the dance, as they say. It's the hammer and the dance. You hammer, you lock it down, and then after the lockdown, you dance with it. So I think when you get your dancing shoes, as they say, ready, and the government does its job, the private sector, every single individual, whether from whatever sector you come from, the laylayan, as they say, or from the 1%, you have to do our part. And then and government has to be at the forefront of that, in making sure that everybody knows the message, and that this is what we're gonna do, this is where we're going, and yeah, I mean that's how the dance will come out, and then eventually, if you notice in that particular worst case scenario, we do have a point there in January 2021 where there's an assumption that the vaccine, because normally it's 12 to 18 months, right? That's what they say. So
Yeah.
the optimistic in the worst case scenario is there in January. So
Meron pa rin sino dadating at one point. The last question, sorry, because I must ask your position on the oil story here. A lot of traders are saying that was a one-off issue,
mm,
that it's led to negative territory with WTI. But just going forward, does this simply bode well? Is this actually something that might help us recover from all of this, especially since our peso is stronger because of the oil, according to some analysts, and possibly our inflation. At least it's going to be a reprieve for some consumers.
yeah, well, for a net importer of oil, it's really anything that's makes oil cheaper. I think is somehow good news. So so yeah, you just have to really make the most out of it, and make sure that the government or the economy comes out better with this particular situation. I know it's not going to be a prolonged time to have this, and I think I would say it's really a one-off, because it's just that
Yeah.
they were trying to get rid of trying to even pay the ones buying from them, so that because they don't have anything to put their stocks. So yeah, I think it's something that as a net import like the Philippines can really take advantage of.
Okay, so thank you so much for that answer. That was, of course, Chief Economist of Union Banks, Carlo
Thank you.
Asuncion. Saying it's a difficult situation, but it's a balancing act. Still one bright spot there. Possibly a vaccine in 12 to 18 months, but also the paring back of the prices of oil to benefit our importing economy. Thank you so much for those insights, Carlo.
Thank you.
And that's it for the business day this Tuesday. Today is April 21, 2020. Thank you so much for watching. Catch us again 10:30 a.m. tomorrow. I'm Danny Laurel, and we are One News.